Howdy there, folks. I wasn't planning on making a video today, but I thought I would just make you guys a little something here. I was just looking over a few things in some different accounts and whatnot, and I think this video is going to be called something like I messed up bad, something like that, right? And I want to share some things with you guys in this video. And I want to be fully transparent because there's been a couple things that have happened in the market that I just never saw these things coming. And I want to share those. And with my channel, I try to always be very, very transparent. So, you know, when things are going great, I show it. If things are going bad, I show it. I'm never ashamed to show my failures. I'm never ashamed to show my success. Like, it is what it is. And I remember the year was 2017, and that was the first time I ever saw somebody like make a negative video about me. It was in 2017, and got me very, very frustrated, and I was feeling some kind of way. But then, as time went on, as the years ticked on, you know, there was just a lot more chatter about me on videos, on forums, on you know, everywhere. And so I learned, you know, many, many years ago that I either had to accept that or I had to step away from what I was doing, essentially, because there's no way you're going to be super popular and not have a lot of chatter about you. And when things are going great, I definitely got a lot of love, man. And you know, when my stocks are doing well, you know, people treat me like I'm a god on the forums, on the message boards, on videos, things like that. And when things are going bad, they treat me like I'm the devil and I'm clueless. I'm an idiot, right? And then some people seem to get very almost like emotional about me, where they get so tied up into this state where they either like really, really love me or they like really, really despise and hate me. And for the folks that despise and hate me, you know, when my stocks are doing good, they say, I got lucky. I'm just lucky. Oh, he's just lucky. Oh, the Fed did this or this did that. And it's just, you know, he's just lucky. And then when my stocks are doing bad, it's because I'm a clueless idiot who's so stupid and dumb and doesn't know anything, right? And so it's just as fascinating for me to just kind of sit back and kind of see it all play out. But like, that's, you know, as they say, you know, you make your bed, so lay in it. And, you know, that's just what it is. I'm very popular and I'm going to get a lot of love and I'm going to get a lot of hate. And it just depends really on honestly how the market's doing at a given time. Okay. Now, with that being said, I always try to be transparent and show you guys what's going wrong and what's going right. And there's a couple things that have happened in this market that I never foresaw these things coming. And they kind of came out of nowhere. And if you were to take me back, you know, 6 months ago, 9 months ago, I would have been very surprised if you would have told me two things would have played out the way they have, okay? And I want to share those exact things with you. Now, the first thing I want to show you here is this makes me, just frustrated. And the thing that makes me frustrated is actually how well the dividend account has done. You know, this is the only account I have that is green right now. But the fact is, this account just isn't green. It's very, very green. It's almost 44% up in this particular account. That doesn't even account for the dividends received in this account over time. And there's only one position that's negative. So the only account I have that is green right now is this account. And it just frustrates me because it makes me say, man, I should have put more money into this account, right? It's got $150,000 in it, but at the same time, I'm like, I look at my other accounts and how big those are, and I'm like, why didn't I put more money in this dividend account? But that's just kind of the way it is. By the way, wins in this account, although they don't pay a dividend right now, they should hopefully, once Macau business comes back, they should pay a dividend again in the future. They've just always kind of been a dividend payer. They just haven't been able to since their business has been tore up by Rona. But, you know, yeah, I just look at this and I'm like, oh, man. It's like you get that dividend money, plus a lot of these stocks are just held up very, very well, especially compared to anything growth, anything tech. Oh, my gosh, these stocks are like night and day with how well these stocks have done, to be quite honest. And the one that eats me up the most, honestly, is Qualcomm. Qualcomm's a stock that we're up almost 88% on, never mind dibs. And, you know, I just did not buy this one nearly heavy enough. Like, I put $2,600 into it. It should have been a much larger amount than $2,600, let's put it that way. So that one kind of eats me up. Then we look at this and, do I have to look at this? Okay, this is the public account here, right? And there's some interesting things we see. The Chef has been cut in half on us, and Corsair has been cut in half on us. Two very large positions in that account. And, it hurts to see it. I mean, one side of me, it's like, okay, I get to buy shares for a lot cheaper, and that's the good part. But the other side of me is like, oh, man, why didn't I wait? Why didn't I wait longer before I started to build out that position, right? And yeah, when you see a position down 50%, that's what you got to think. You're like, why did I buy that one so early? Gosh, even if I thought it was going to some price, it's like I should have probably waited a little bit. The interesting thing is the Chef, not a profitable company, right? Growth, insane growth, the most exciting food company in the world by a mile. But it's a money loser on the bottom line, right? Corsair, not exciting growth, but it's profitable, it's cash flow, it's a low forward P, and this one's down just as much. It's technically down a little bit more in the Chef. So it just kind of shows you in this sort of market, anything can get slashed, and especially small cap stocks. They can get slashed regardless if they're a money maker, a money loser. In this sort of market, it doesn't care. It's throwing everything out, okay? Honest hurts bad. That one we're down 42% on. And although I feel like I'm going to make a stupid amount of money on Honest over the next few years, I'd be a liar if I didn't say the 42% didn't, hurt. I should have waited longer on that one, right? But did I ever see Honest going to $2, $3 a share? No, never saw that. $7. Okay, I could always see $7, $6, something like that. But $2, $3, I never, in a million years, I'd be the biggest liar in the world if I ever said, I think Honest is going to $2 to $3. Never, okay? That's just insane. Like, it's a diaper and wipes and makeup business. Like, come on, man. Soaps and shampoos, stuff like that. Like, I just didn't see it. The Planet, 42%. That one's kind of like, you understand, because it's, I don't want to say it's a dollar stock, but it's like, you just understand what that company is, right? In the industry they're in, and it's going to be very volatile. I get that. Avant Brands, 56%, kind of understand that one there. And then Voyager's a whole different situation. It's a very different situation than in any of these others. That's a crypto mess. Let's just call it that, okay? But the bottom line is I look at this account and I'm like, wow, why didn't I put more money in the dividend account and not in this account? So there's some things I consider. Now, there's two things that have happened in the market that I just never saw these things coming, and I just want to be fully transparent on it. The first thing is, this is what we're looking at here. This is forward Ps for Yardini, from Yardini Research on mid caps and small caps. And I would be a liar if I said I expected small caps to get as cheap as they have gotten and stay down here for as long as they have, and mid caps as well, because a lot of what I've been buying over the past 9 months is small caps, loading up on small caps, because they're, in my opinion, phenomenal deals for the long term. But I would be a liar if I said I ever foresaw these stocks trading this cheap for this long. I mean, basically how this is supposed to work is small caps usually trade between a 14 and 18. Okay, 14's you're getting low, and if you go under 14, you're extremely undervalued. 16, 18, that's where you're usually at. If you get above 18 on a forward peak for smalls, you're getting a little rich. Okay, and those companies better have some insane future profitability coming, because you're getting rich if you're getting above 18. Mid cap, same exact thing. 14 to 18, right? You go under 14, you're extremely undervalued. The closer to 14 you get, the more undervalued you are. The more above 18 you are, the more overvalued you get, and more likely you're going to have a drop. And that's just what we've seen consistently throughout the last 20, 30 years or whatever, right? And so, right now trading at like an 11 on small caps. I think at the lows it was like 10 something, 11.7 on mids. So I just never foresaw us getting down this low and staying down here for this long. And the only time period we ever have in recent history where we've had this sort of time period is the Great Financial Crisis. In the Great Financial Crisis, we went under 14 forward P for small caps, and we traded under there for like a year. Same exact thing happened with mid caps, right? We went under 14 starting in 08, didn't come out till, middle of 09. So we were down under 14 for about a year. And I never foresaw this situation being that we would be under 14 for such a significant amount of time. Because I remember us seeing going under 14 6 months ago or so, or 7 months ago. So the fact is, we're on a trajectory that is very, very similar to the financial crisis in terms of how long these stocks are staying under here, because you just don't see this. I mean, look at this. You got under 14, but you never got, under where we're at right now. And this was in the double dip recession fear. Small caps never even got close to that range. So we literally, we're basically, there's only been one precedent before this in modern history, and that was a great financial crisis. I never foresaw that coming, okay? The second thing I never foresaw coming. And if you took me back in time and you told me this, I'd be like, I don't know, man, that sounds a little far-fetched. It's this right here. I never saw a situation where in the middle of this year, we would have an overwhelmingly bearish market, but not just overwhelmingly bearish. We're talking to the point of the only time period you can go back to where the market was this fearful was the great financial crisis, when we had some of the biggest banks, some of the biggest investment banks failing. That's the only time period you can see. We're less bullish on the market than we were when we were in Rona. And people were talking about where the economy is going to be shut down for 3 years, and all these businesses are going to zero. And Bill Ackman was going on TV. We're more bearish on the market right now as an investor community than we were at that time, which is just mind blowing to think. The only time in history, basically, that we were ever this bearish on the market was a great financial crisis. And it's mind blowing to see, especially for this survey that's been done all the way back to the 80s. 18% of investors bullish on the market for the next 6 months. There's basically no one. Basically no one is bullish on this market the next 6 months. Everybody overwhelmingly bearish on this market right now. Just insane. I mean, the usual number is 30% bearish. We're double that right now. The usual amount is, 38% bullish. We're at 18%, half of that. So, and when you're in a really bullish market, you start getting up to like 50%, getting close to 50% on a bullish side. So, I mean, we're just in this moment in time that I just honestly never foresaw this playing out this way, where we would be this low on forward P's for this amount of time and the market would get this bearish. And the thing for me, and do I change my strategy kind of moving forward and things like that? And first off, if I had to redo things over again, sure, I would have kept more cash around and I would have been buying much heavier right now in the summer period than I was several months ago. But hindsight's always perfect in the stock market, and we'd always say, well, I would have bought heavier here and bought put options here and bought call options here. Like, yeah, if we all had a crystal ball and you could view these things, right, it'd be beautiful. But that's just not the way it is. Do I change anything moving forward? Absolutely not. I can't invest on hopes and prayers that something's going to happen in the market that doesn't ever happen. I can't invest based upon thinking, we're going to go to less than 20% of investors are going to be bullish on the market. That almost never happens, other than maybe a once in a 10 or 15 year span. I can't invest based upon hoping forward P's on small caps and mid caps are going to go to 10 and 11 range, because that almost never happens, other than the great financial crisis. So I'm not going to invest based upon freak situations that almost never ever happen. I'm going to invest based upon how things are usually happening. Usually the market is a more bullish than bearish. Usually the market does not trade at 10 and 11s on forward P's for mids and smalls. Usually it's like 14, 15, 16, 17, 18. And so the thing for me is I'm going to continue to invest the same way and staying consistent. And whatever I do in life, I like to just try to keep it consistent. My investing approach, consistent. The making YouTube videos, consistent. Like, I just be consistent. And the rest is conversation. And yeah, you're going to get a lot of hate in a market where you're investing in stocks that aren't doing well. But that's just I came to accept that a long time ago. And when it comes to my investing approach, I came to accept a long time ago that in a outlier market, I'm going to get shredded. And I said this even in the most bullish market we were in, which was the end of 2020 into 2021. I even told people, I'm like, when we get a massive sell-off in a bad market, I'm going to get shredded in that market. And that's been exactly what's played out. That's just what happens. My investing strategy is not the safest strategy in the world by any means. But damn it, I'm going to make a whole lot of money. I'm going to make a whole lot of money over the coming years. And then they'll say it was luck again. That's just what it is. He just got lucky again. Damn it. Prick. Always gets lucky. Just wait till the next time. He's going to get shredded. It's like, yeah, I'm going to get shredded again next time, right? The only thing is, these sort of situations, this sort of level of shredding, as I call it, is very few and far between. It's like a once in every 10 to 15 years. You get this sort of downward market for this long, where we peaked in November, and as of a week or two ago, the NASDAQ was down almost 34% from the peak. You very rarely ever get the NASDAQ to go down 34, 33% in an 8-month span. It's a vicious market. It does happen. You have to accept it. And if you can't accept it, you can't move on to the next level. And part of the stock market and part of life is you have to move past these kind of like mental barriers, I call them. And mental barriers are investing in markets that are very, very scary, where everybody's pessimistic. Mental barriers is like, for me making YouTube videos, knowing I'm going to get a whole lot of hate all the time. You just got to move past those mental barriers, and they will hold you back. You will not go to where you want to go in life because you're basing your decisions off of what other people want you to do versus what you want to do, right? And then you start living your life, which is only one life. You start living your life based upon what other people want to see, rather than what you want to see and what you want to get out of life, right? So anyways, stock market's just a great representation of life at the end of the day. Much love as always, guys. Thank you so much for joining me. I appreciate you, each and every one of you, whether you love me, whether you hate me, or whether you're in between, which is nobody in between. I appreciate you guys. Much love and have a great day.